In this video, I'm going to be explaining exactly what daily bias is, why so many people are doing it wrong, and why it's so important to have ahead of your trading. So let's get right into it. So let's take a look at the gold versus USD chart, or for a lot of you guys, you might know this is XAU USD. And you can see that right now we're in the end of April, and since the beginning of April, and honestly, for a while now, we've been super bullish. Since late last year, we've been super bullish on gold, and we've been hitting all-time high after all-time high after all-time high after all-time high. And there's been some retracements with this. So, the market going down, reversing a little bit, hitting a high time frame point of interest and moving, continuing up. But what daily bias is in the context of this is understanding exactly where the market wants to go, what the order flow is, which is, again, the flow of events, where price wants to go, the story, which is what we call the narrative. And this one thing added to your trading could make a huge difference. And the reason why is because a lot of times people will be looking at the minute chart. They'll be looking at the 5-minute chart or even the 50-minute chart, and they'll try to form a bias off of that. They'll say, we had a breakish structure to the downside on a 3-minute chart, and so we should probably go sell. Or we have a 1-minute breakish structure to the upside. We just tapped into a fair value gap, which is, again, these are SMC concepts you may have heard of before, and then we're going to take the buy position or the sell position right away. The reason why this doesn't work is because there are high time frame magnets that are pulling price in a certain direction. You got to remember that it is not the 1-minute chart, it is not the 3-minute chart that will be the fundamental of where price is going, because yes, it may have some impact, and you can use low time frame entries to get into a really good trade, but only if it's based off a high time frame entry. I'm going to tell you guys straight up, if you've ever had a successful trade on a 1-minute chart or a 3-minute chart, it was not because the 1-minute or 3-minute structure and price was forcing the entire market to go in one direction based off that. It was because it was in line with higher time frame that you're probably not seeing. And when I was first starting to trade, I realized really quick that it wasn't that I was like a king of scalping and, I was hitting exactly what I needed to hit and everything was lining up perfect. And the minute and 3-minute and the 5-minute charts moved the market completely. It wasn't that. I was blind to the fact that my entries were actually working out pretty well or they were losing because it was all off high time frame. And there was a point in time where I was taking trades just off 1-minute breakish structures, 1-minute fair value gaps, 1-minute order blocks, and I was actually winning. And it was funny because it was actually beginner's luck. There was really no skill to it. And I was making so much money off this until I realized that I actually didn't know what I was doing. And I hit a losing streak. And then as soon as I hit that losing streak, it was really bad. And I was like, what is going on? Why is it that this strategy that I've been using, SMC, is working so well, but now all of a sudden it feels like my strategy isn't working, and it forced me to try to redesign my strategy and change it completely. And it was changing it over and over and over again that actually led to me being unprofitable. But it wasn't actually anything I really needed to change about the strategy itself. It was where I was looking. So the reason I want to point you towards this gold chart is because overall, if you place a buy position, you're going to be pretty good. I'm not saying, place a buy right now and hold it. Although technically, if you're a holder of gold right now, it's pretty much what you're doing. If you buy, let's say, an ounce of gold, you're pretty much buying at that price and you're hoping the price goes up. But in day trading, you want to catch more specific movements in price. You want to catch the fair value gaps getting filled with the tight stop loss, 1 to 2, 1 to 3 risk to reward, or even higher than that. But you're not going to do that if you have an open stop loss. I literally see free trade signals channels that have a 10 to 1 risk to reward. So you're risking 10 times more than what your take profit is. And it blows my mind because I actually have a free signals channel and our minimum TP1 is a 1 to 1. And so we have positive risk to reward. And these are the signals that I send out personally, which, by the way, if you want to be a part of one of the biggest movements and one of the biggest campaigns that I am hosting to give the opportunity to beginner traders to actually take high risk reward signals that work in your favor, giveaways, and a whole contest that will really put you to the test, and not only put you to the test, but actually help you learn something and become a better trader and a more profitable trader. Check the link in the description. I'm going to have a waitlist attached so you can register for the Zoom webinar that we're going to have, where we're going to announce all of this. But you want to make sure you get in now and you don't wait any longer, because trust me, space will fill out, or even worse, time will pass and you'll miss out on the opportunity completely. But something I was talking about to my students was how to identify retracements in bullish markets, or in the opposite sense, finding retracements in bearish markets. Where is the market wanting to go overall? And although we're extremely bullish, where does the market want to go? And when will this happen? Because if I place a buy and let's say it was Friday, April 4th, I just placed a long position just because I wanted to, fulfill trend and I wanted to continue higher because that's what we're supposed to do, I would have got burned. And the same thing would have happened the next day. I would have seen this swing low here, maybe I would have taken a buy and I would have got destroyed because the distribution leg pulled us down and it was going deeper into another fair value gap. And this is what the crazy thing is. Price pulls the market down into areas where it wants to get filled. And there's two major areas that it wants to do this in. Number one is liquidity, and number two is imbalances or fair value gap. This isn't some secret method that like no one talks about. You've probably seen videos that talk about these concepts, but the problem is putting it together is a lot harder than just understanding what they are on its own. And this is where I really deep dive into my students with this. But in this video, I want you guys to understand that when we have pullbacks like this, your bias will save you in moments like that. Your bias will give you a clearer picture of whether you should be looking for buys on that day or you should be looking for sells. Now, when you have a trending market where the weekly chart, the monthly chart, and the daily chart are all bullish, you probably only want to take longs. But if for whatever reason you have really good bias pointing towards the downside, let's say in this, and we break structure to the downside on the daily chart, that could be a reason for us to be concerned. We had a break to the downside right here on the daily chart, but it wasn't really to do anything except fill out this fair value gap here. And this was a play that we actually took and I sent out in my trade community. We tapped into this and we went long in the beginning of April and we had this massive bullish leg in April. But again, a break of structure to the downside it has to be pretty significant to break a trend like this. And I hide all the drawings that I have because I want you guys to get the clear picture. Right now, as much as you can say that we've gone down from this area, this swing high is formed and we're going down, this doesn't mean we're overall bearish for gold. It doesn't mean that we're going to be bearish and break structure all the way to the downside. We're still bullish. So you got to make sure that your bias ahead of time still makes sense. Just because you see one bearish candle or two bearish candles does not mean that we're going to continue lower. And you can see that we actually respected this daily fair value gap right here. And it was a pretty obvious respect of that level that we saw because we tapped into it and we continue to go higher. Now there is an opportunity for us to go lower and maybe hit these deeper retracement levels, right? This daily fair value gap right here. There's another daily fair value gap and I marked out this 4-hour fair value gap inside of this daily bullish fair value gap. And there's a lot of different areas that the market can hit, but does it want to? Not always, because there were so many areas here that formed as well that we never really hit, right? There's a small fair value gap here on the daily chart. There's another fair value gap here that didn't get fully filled and then came back later, almost 2 months after. There's another fair value gap here that never got touched. And these fair value gaps are forming and they haven't been tapped into. It is likely if you use, a Fibonacci retracement tool, you can see that these levels may be pretty nice for us to go in. And that could be a weekly or even a monthly bias. I could say that, we may want to go down for the next couple of weeks. But if my daily bias is focused on what the next day is going to produce, and I zoom in and I see exactly what we have right now, I see that on a daily chart, we've respected this imbalance. A key tip that I learned when I was trading was that when the market is respecting bullish points of interest, you'd be kind of foolish to go for shorts, because going for shorts in that scenario, you're betting against the entire price, like in this case specifically on the monthly. You're pretty much saying that what you're identifying right now on an hourly chart or a 15-minute chart is going to pretty much destroy what we see on the daily, the weekly, and the monthly. And that doesn't really make any sense. If bullish structure is being respected, you're bullish. Now, if bullish structure is being disrespected and now we're starting to form bearish structure and we're respecting that, then maybe we want to turn a little bit, and short term, we say our bias is flipped to now bearish. To give you a good example of that, we had this 4-hour fair value gap right here that got filled, right? This 4-hour fair value gap got tapped into. We went a little bit higher and we respected it. We came back down, respected it, did not sweep this liquidity, okay? And now we've continued to go higher. And I marked down here on the hourly chart, we have an hourly break of structure. We started to form some bullish points of interest. And if we can retrace into this area and continue higher into this 4-hour fair value gap, we're looking pretty good to go long and take out the previous day high, take out the previous week high. I always mark out previous day high and low liquidity because those are areas that the market may want to hit. Now, not all the time, but they are significant areas. And you could see even from the previous day here on this swing low, we took a sell trade at the top and caught a massive leg down of 400 pips. And we form these areas of liquidity that we want to respect, break, or retest. And the same applies to imbalances on high or small time frame. So when I see that we hit a daily fair value gap, and we've respected this liquidity area and not swept it, and now we're forming structure to the upside, the disrespect of this bearish fair value gap and closing above it, to me, is a very bullish sign. This bearish fair value gap now getting closed above is a very bullish sign because we're disrespecting bearish market structure and now we're actually supporting bullish market structure. And so the next move for me going into this week, because today's Sunday, I want us to retest this hourly imbalance level, respect it, continue to go higher, and disrespect that 4-hour fair value gap that's resting above. And ultimately maybe reach these areas of liquidity up here, which are relative equal highs on the previous day high. Now, if we don't get that and we respect these areas, this bearish market structure, which is higher time frame, we're going to go down, and I assume we may even break this liquidity, sweep it, and even maybe potentially go to lower points of interest and tap into that. And that could cause a pretty big reversal in market structure for us to go down maybe for the first half of May. But we're not going to know that yet until we have a massive break in structure on a higher time frame. This is why I look at the daily, the weekly, sometimes even the monthly. I look at all the time frames and I do top-down analysis. And for you to take in your notes, when it comes to bullish or bearish market structure being respected or disrespected, you got to look at our bullish or bearish fair value gaps being respected or disrespected. Are there any strong areas of liquidity that may pull price towards? And to reiterate, if we're respecting bullish POIs and disrespecting bearish POIs on high time frame, we should only realistically be looking for longs. And the same applies to the reverse scenario. If we're bearish POIs and disrespecting bullish POIs on high time frame, we should probably be bearish. We should probably be looking for short. And this is what people are getting wrong with bias. I've seen videos out on YouTube that are talking about daily bias in the perspective of looking at the previous day candle. And if it closes below another candle, you're bearish. If it closes above another candle, you're bullish. And I used to actually follow this and I subscribed to this model. But then I realized really quickly how wrong it was, because I was wondering why I was getting stopped out. I was wondering why my whole bias was wrong. And I realized that because I traded the New York session, I needed to do my bias late at night. Before London, of course, because I need to wake up early for New York session. So at around 11 p.m. Eastern time, I'm doing my bias. Even midnight Eastern time, I'm doing my bias. So I can get up at 5:40, 6 o'clock in the morning, do my morning routine before I get on the charts. And I have a bias right before London. Now, London is known to be manipulation, right? So if you guys are familiar with Power of Three or the AMD model, right? Accumulation, manipulation, distribution, you know that London tends to be in the manipulation event, and in New York, we get the distribution. And so I noticed that if I do my bias ahead of London session, right at the end of Asia, I have a good idea of where the market's going to go. And the only thing that would flip my bias is if London manipulated in a way that I didn't really like, or if London had a huge distribution leg that took a lot of the volume away that we'd probably have in the New York AM session. So for me, that's a point where I maybe wouldn't want to trade. But the whole point of why you look at this is because the order flow and the narrative of the marketplace is so important for any asset you're looking at. In this case, it's gold specifically on a higher time frame, but this applies the same to anything else. You could be looking at the NASDAQ, you could be looking at EU, you could be looking at the S&P. If you're on the futures market, NQ, ES, YM, it doesn't really matter. Whatever it is that you're looking at, this order flow applies, and this is how you would structure your bias to set yourself up for the next day. Because I want to tell you guys, when you go into trading with a bias in mind, and you know if you want to short or you know you want to go long, it makes things so much easier, because when there's a lot of emotion in an industry like trading, it makes it really hard to stay objective and not be subjective. It makes it really hard for every breakage structure that you see, fair value gap that you see getting filled, to not take a short on a small time frame, or the 1 minute time frame, you see a breakage structure here for value gap getting filled, and then you get stopped out, because you would have got stopped out if you took a trade right here using just those principles alone. And it's like, I wonder why. And it's because you're not looking at the overall picture of what's happening in the market. And this is why it's so important as a trader to take all the emotion out, because when the emotion's gone, you avoid making a lot of dumb mistakes. And when it comes to profitability and retaining your R, which is your risk to reward, you have to be making sure that you're taking highly profitable trades, high percentage trades with a lot of confluences, but not only a lot of confluences, because some people have 7 confluences for their trade. And if you're not familiar with that terminology, what I mean is like confirmations before each trade. You could have 7 confirmations that is going bullish, but your high time frame points of interest are pulling you bearish. And now you're like, well, everything on small time frame is saying that it's going bullish, but my high time frame is going bearish, which is why I got stopped out. And this is what you have to keep in mind. Trust me, the easiest thing as a trader to do is force entries. I've been there. A lot of traders have been there. It's sort of a rite of passage. You're going to blow accounts, or you're going to fail evaluations because you're forcing trades. You get greedy. You want to trade. Trust me, if you want to get that fix, start backtesting. Start using TradeZella or FX Replay and start trading on that, and you'll realize that feeling of wanting to get into a trade and just making money and that emotional attachment to it will cost you a lot more, which will probably drive you out of the industry. And a lot of people will end up quitting trading as a whole because they're wondering why they're losing so much, but they're not realizing that it's not the technical, it's the mental. But the technical and the mental are so tightly knit, because for you to have good technicals is only part of the game, but for you to use those technicals to your advantage, approaching a marketplace with a daily bias is so key, because you're going to have exactly what you need to make the right decisions. And this will make life a lot easier for you if you're trying to become a profitable trader. So my bias, if you guys are trading gold, after seeing this break of structure to the upside in the hourly time frame, we also have a 4-hour break of structure here to the top. I'm expecting a retracement down into this hourly bullish fair value gap to continue to go higher in our AM session. I want to manipulate in Asia and London down here to set us up for a New York displacement higher, and with targets deeper into this 4-hour fair value gap and ultimately in this 15-minute imbalance as well. Anything higher than that, which is technically still internal range liquidity for us because it's the previous day high, it's okay. But I eventually want to see the market continue to go and break higher highs and form higher lows and ultimately, give us more all-time highs. So that's where I see gold at right now. That's my free game ahead of the market. So keep an eye on that, mark it up yourself, take a look at it on your charts and make some money. Like I said, I'm going to be hosting a free trading contest. I'm going to be giving away a ton of stuff, and I'm going to be giving away my personal signals. So all the stuff that I'm doing, the buys that I'm doing every single day, and the trade signals that I'm going to be sending out are going to be going straight to you. All you got to do is have money in a live account. We're going to be running this thing up, but I'm not going to spoil too much. So join the waitlist. The link is down in the description below so you can actually get access ahead of time before spots fill out. This will be a really cool opportunity for you guys to learn things, meet some other traders in the community, and also take highly profitable signals with a high risk to reward ratio so that you're not kind of going like those other free trade groups that are having a 10-to-1 risk to reward. So you're risking 10 times more than you're going to win. And if you're someone who wants to work with me one-on-one in my community and actually get my daily bias that I call out every single day, the trade recaps, the trades that we do, the signals, and not just the ones we give away for free, but the highest performing ones, the premium signals, as well as a bunch of education and a bunch of things to just help you become profitable, that is available as well. So you can chat with me in our Discord community. The link is down below in the description if you guys want to take advantage of that. Trading is an amazing way to make money. The fact that there is no border to your income and you can make money literally whenever you want, wherever you want to be. It truly changed my life, and although it's not easy, it is simple, but it's a lot more difficult if you don't have help. But that's it for this one. I'll see you guys in the next one. Take care and peace.